Understanding the differences between W-2 employees and 1099 independent contractors is critical for both workers and employers. These classifications directly affect tax obligations, benefits eligibility, job control, and legal responsibilities. Misclassifying workers can lead to serious penalties, while misunderstanding your own classification can result in underpaid taxes or missed benefits. Whether you're considering a job offer or hiring help for your business, it's essential to know how these two roles differ. In this video, we'll explore the top 10 differences between W-2 employees and 1099 contractors, covering the most impactful legal, financial, and practical distinctions. 1. Tax withholding responsibilities. The biggest difference between W-2 employees and 1099 contractors lies in how taxes are handled. W-2 employees have their federal, state, Social Security, and Medicare taxes withheld automatically from each paycheck by their employer. In contrast, 1099 contractors receive the full amount of their earnings and are responsible for paying self-employment taxes on their own, typically through quarterly estimated tax payments. This difference significantly impacts cash flow and year-end tax liability for contractors. 2. Employment benefits. W-2 employees often receive employee benefits such as health insurance, paid time off, retirement plan contributions, and unemployment insurance. Employers are generally required to provide certain benefits or contribute to federal and state programs on behalf of their employees. 1099 contractors, however, are considered self-employed and are not entitled to employer-provided benefits. They must obtain their own insurance and plan for time off or retirement independently. 3. Degree of control. Employers have greater control over W-2 employees, dictating work hours, how tasks are completed, and even the tools used. Employees are expected to follow company policies and be supervised accordingly. On the other hand, 1099 contractors retain more independence, deciding how and when to complete their work, provided the final product meets the contract's requirements. The IRS uses this control factor to help determine correct worker classification. 4. Work relationship duration. W-2 employment is generally seen as ongoing or indefinite, meaning employees work continuously until the job ends or they resign. 1099 contractors typically have short-term or project-based relationships, often outlined with start and end dates in a contract. This limited engagement structure provides flexibility for both parties but may lack long-term job security for contractors. 5. Job training and supervision. Employers usually provide job training, onboarding, and supervision for W-2 employees to ensure consistency and quality. They're invested in the employee's development over time. Independent contractors, however, are considered experts in their field and are hired specifically for their existing skills. They do not receive formal training or close oversight from the client, which emphasizes their autonomous status. 6. Use of tools and equipment. W-2 employees are typically provided with company-owned tools, equipment, software, and a workspace. These resources are maintained and paid for by the employer. In contrast, 1099 contractors are generally expected to use their own tools and equipment, which they are also responsible for maintaining and upgrading. This distinction also supports IRS guidelines on independence and control. 7. Reimbursement and business expenses. W-2 employees may receive reimbursements for job-related expenses like travel or supplies, and these reimbursements are often tax-free. 1099 contractors, however, are not reimbursed in the same way. Instead, they can deduct qualified business expenses on their tax returns using Schedule C. This means independent contractors must keep thorough records to claim deductions and reduce their taxable income. 8. Legal protections and liability. W-2 employees are covered by federal and state labor laws, including minimum wage, anti-discrimination protections, overtime rules, and unemployment benefits. They can also file for workers' compensation in case of injury. 1099 contractors do not have these legal protections, and they're responsible for their own liability insurance. Misclassification can expose businesses to lawsuits and back payments if contractors are actually functioning as employees. 9. Tax forms issued. At tax time, W-2 employees receive a Form W-2 from their employer, summarizing wages and withheld taxes. Employers file this form with the IRS and appropriate state agencies. 1099 contractors, by contrast, receive Form 1099 NEC from each client that paid them $600 or more during the year. Contractors must aggregate their income and file accordingly, often with more complexity than W-2 workers. 10. Eligibility for retirement plans. W-2 employees may be eligible to participate in employer-sponsored retirement plans like a 401k, often with matching contributions. In contrast, 1099 contractors need to set up their own retirement plans, such as a SEP IRA or solo 401k, to benefit from tax-advantaged savings. While these plans can allow for larger contribution limits than traditional employee plans, they require more personal responsibility and planning. Choosing between W-2 employment and 1099 contracting involves more than just comparing pay rates. Each classification comes with distinct responsibilities, benefits, and risks, particularly when it comes to taxes, benefits, and job control. W-2 employees enjoy more security, protections, and support, while 1099 contractors benefit from flexibility, autonomy, and potential tax deductions, but must manage everything themselves. For employers, proper classification is not just good practice, it's legally required. For workers, understanding the difference is key to making informed career and financial decisions. Whether you're hiring or being hired, make sure the role matches the classification to avoid complications down the road.